In this video we are going to talk about how to make 100 a day trading stock option. So before starting, please like this video and subscribe to this channel for our future updates. Day trading in the stock market can be extremely lucrative, but it seldom leads in financial success. In fact, many people are more likely to lose money than to win money, despite the allure of the promise of making quick riches. For their part, investors who acquire and hold low-cost index funds that track a broad market index such as the S&P 500 may see their returns increase over a longer period of time. Historically, the S&P 500 has earned an annualized total return of around 10% on average. To prevent getting in over your head, it is vital that you follow to some basic standards when day trading in order to avoid being a victim of your own curiosity. How to approach day trading in the most secure manner possible is covered in this course. Here's how to begin day trading. Despite the fact that there are hundreds of strategies and tactics for increasing your day trading revenue, the following three are the most important for reducing the major risks connected with day trading. Number 1. Trade with money you can afford to lose. It is vital to set aside a specified amount of money each day for day trading purposes. Don't trade for more than that amount, and don't use any of the money from your mortgage or rent to fund your trades either. Number 2. Start small. Day trading is a high-risk endeavor, and you will undoubtedly make mistakes and lose money, particularly in the early stages. You should keep a particularly tight rein on your losses until you have gathered some valuable experience. Number 3. Don't quit your day job. If the stock market has been on a sustained bull run, you may find yourself in a fortunate position. If the market is choppy, like it is during a recession, you'll want to wait and see how your trading technique performs before investing any extra resources in the strategy. Once you have established a pattern of consistent gains, you should assess whether or not you want to devote more time to trading in the future. Best securities for day trading. To get started, you'll need to figure out what kinds of securities you'll be buying and selling in order to know where to begin. The possibility of day trading in a wide range of financial products, including bonds, options, futures, commodities, and currencies, is a reality. Stocks, on the other hand, are among the most popular investments for day traders since the market is huge and busy, and commissions are low or non-existent. A common characteristic of stocks that perform well on a day-to-day basis is that they have the following characteristics. Number 1. Good volume. Stocks are popular among day traders because they are liquid, meaning they can be traded often and in big quantities. Liquidity refers to a trader's capacity to buy and sell without materially altering the price of a security. The foreign exchange markets, like the stock markets, are extremely liquid. Number 2. Some volatility but not too much. The frequency with which the price of a securities changes is referred to as its volatility. It is critical for a day trader to be on the move at all times in order to make any kind of profit. After you have taken a position, it is necessary for someone else to be willing to pay a different price than you. Number 3. Familiarity. To trade successfully, you must understand how an asset trades and what drives it to move in order to make informed decisions. Is it more likely that a company's earnings report will be negative or positive? Is a stock stuck in a trading range, bouncing back and forth between two values on a consistent basis? What is a trading range? Understanding a stock can help you make better trading decisions. Number 4. Newsworthiness. Individuals become interested in purchasing or selling a security after hearing about it in the news or on television. This leads to the formation of volatility and liquidity in the marketplace. Many day traders keep an eye on the news in order to come up with ideas on how to proceed with their trades. Rather than conducting fundamental research, which requires evaluating characteristics such as a company's goods, industry, and management, day traders who concentrate on stocks frequently conduct technical analysis, which involves tracking the movements of stocks on a chart. However, rather than focusing on hundreds of different securities in a single day, some traders choose to concentrate their attentions on a small number of equities and become well familiar with them. You can make more informed decisions about your investments if you understand when to purchase and sell, as well as how a stock has fared in the past and how it may perform in the future. Here are the popular day trading strategies. In order to maximize your chances of making a profit after selecting stocks to trade, you'll need to select the most appropriate trading approach to use in conjunction with them. There are various typical methods from which to choose, and you may like to specialize in one particular way or mix and match strategies from several other categories to suit your needs and preferences. Swing, or range, trading. Range-bound trading is the term used to describe the practice of trading stocks that tend to fluctuate between low and high prices. Traders buy stocks when they are near the low and sell stocks when they are near the high, which is referred to as range-bound trading in the financial industry. Moreover, when the stock reaches a high point, they may sell short in the hope of profiting when the stock falls to a low point, and then close out the short position on the stock. Number 5. Spread trading. In this high-speed technique, traders aim to profit on temporary shifts in emotion by taking advantage of the difference between the bid and ask prices for a stock, which is known as a spread between the bid and ask prices for a stock. Example, if the bid price of a buyer drops suddenly, a day trader may join the market to purchase the stock and then attempt to resell it at the stock's ask price or higher, so profiting from the transaction by gaining a small spread. Number 6. Fading. Traders will short sell stocks when buying interest in them begins to fade. This results in a stock that has gone up too swiftly in the near term. The trader may elect to close the short position if the stock's value decreases or if there is a rise in purchasing interest in the stock. Momentum, or trend following. This strategy tries to ride the wave of a stock that is moving, either up or down, as a result of an earnings announcement or some other piece of information. For example, traders will buy stocks when they are rising in price in order to stay up with the trend, and they will sell them when they are down in price. A cent per share may be important to some traders, such as spread traders, while a higher profit margin may be important to others, such as swing traders, before closing out a position. Some traders prefer to maintain a neutral position in case bad news is released before they have a chance to respond. A stock's order flow, which is a list of prospective orders lining up to buy and sell the stock, is closely monitored by day traders in order to identify when to trade. A stock that has fallen to support, which is the price at which other purchasers will enter and purchase the stock, boosting the possibility that the stock's price will rise, will be sought before making a purchase by the investor. Traders will wait for the stock to reach resistance, which is a price at which more traders begin to sell and the stock's price is more likely to decrease, before they sell. Seeing the order flow will be necessary in order to make such decisions, thus look for a broker who will allow you to do so. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.